And how does inflation impact the real estate market? Okay, so we have charted out, right, the inflation. Okay, another big thing, right? Because inflation going up, right? Interest rates going up, right? The reason why interest rates have to go up is because inflation is going up, and they use it as a way to counteract inflation. And how does inflation impact the real estate market? Okay, so we have charted out, right, the CPI, which is the basically, right, the inflation because it's the consumer price index as a function of the property price index. You have seen historically, as inflation comes up, property prices also come up. Quite understandable, quite logical, right? Because property is the single biggest ticket item that most people will buy, and if there's inflation, because inflation also will inflate the prices of building materials, hence the second chart, right? So BCA actually publishes data like that. They consolidate all the tender prices, right? But BCA tender price is more of for the government contracts, but it is sort of a very good barometer for what's going to happen in the construction sector as a whole. What's concerning to me is that sharp increase. If you can see over here, I don't know, oh no, you won't be able to see, but in the last part, right, in the second, third, fourth quarter of 2020, you see how the gradient is increasing significantly. That goes to show that the builders they have already factoring in a huge increase in material costs, manpower costs, okay? And we have not yet seen this increment being reflected into the property prices as yet. So I've always used this analogy of like property prices acting like a spring, correct? So if you've not seen it, you can go and watch our videos about the cooling measures, right? Where I use the 3 items to sort of give you an analogy of how I see the Singapore real estate market. I'm going to get Andrew to put in that link into the chat. You can jump over and see it after this Facebook Live, okay? So that spring, right? So the spring has been compressed, in my opinion, over the last couple of years, right? Because of COVID, pent-up demand, and the fact that the government has not yet released sufficient land, even with, right, the lack of supply over the last couple of years. So all this is actually loading up that spring, okay? They have released a bit of tension in that spring by instituting more cooling measures. But this inflation, as you can see with the BCA price index, I believe is again going to add additional pressure and is loading up the spring again, because we have yet to see this cost be reflected in the property price index, right? Because the recent land sales, there hasn't been a lot of land sales, right? Of course, you're going to see land sales happening, but if you are charting it based on historical numbers, the numbers are really, really low. And I believe that's one of the reasons why the government is also trying to hold back on the supplying too much land into the market at this point in time. Also why they have instituted the cooling measures, because the cooling measures is trying to hold the developers back from doing too many en blocs. Because all this pent-up demand from the developer side for land, right, coupled with a huge spike in construction costs, all this, right, when the project actually launches, high land costs, high construction costs, it's going to make property prices shoot up, at least based on data points, okay? Because they're going to have to launch at, traditionally we factor in maybe 100, 200 PSF of the land sale price, then that's going to be sort of the break even. But if that break even is going to be like becoming 250, 300 PSF, the developers, they buy the land at break even maybe 2000 PSF, they're going to have to sell you at 2006, 2007 PSF. Then the market is going to get shocked. They'll be like, why the property price suddenly shoot up again? FOMO sets into the market, blah 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 blah, right? And it's causing a vicious cycle. So I think the government is really in a very tricky position at this point in time. And like I've explained in my previous video, I feel the whole market just settling into sort of a natural equilibrium, with the government not launching too many new launches, and hence demand all flowing into the resale market. So, and that's what's landing us into the topic for this week, right? With that's happening, where does the next pocket of opportunities lie, right? So inflation, in essence, right, back to this point, inflation, generally high inflation is good for property prices, good for asset prices. And how I see it, we're going to see a huge increase coming in the next couple of years because of increased construction costs, because of pent-up developer demand as well, and us going through a historical undersupply of new properties into the market.